Good morning and welcome, everybody. How we doing on this fine Friday Eve? Welcome to the Premarket Prep session. Every day we're here live on YouTube. We go over the important economic news, market data, market analysis, and potential trade opportunities, if you're lucky, as we dive into the opening bell. So you can't go into anything and expect to succeed without preparing, right? If you fail to prepare, then you prepare to fail. So we want to make sure that we're here each and every day preparing to succeed, putting forth that little bit of effort that amounts to a big payoff, right? Which is our accounts rocketing in the background of us doing our other daily work. So I want to wish everybody a happy good morning, and I'm excited to get into what we have going on today. Vivian, Detrice, Paul, Andrea, Stephanie, good morning. Benjamin, good morning. Make sure whether you're watching live or via replay too, that you set your intention for this session. Throw a 1 in the chat, setting your intention to get 1% better. So we're here to do each and every day, get 1% better. That compounds on top, right, of of the next. And we just get better and better and better as time goes on. So let's see here. I want to make sure. Okay, cool. Yeah, it's fine. I was just going through my emails. I was looking through the newsletter, but we're here to go over what we got for our Wall Street breakfast session here. Like I said, important news notes. Our top news this morning being quote unquote the end. So a lot of headlines have been coming out of the media sector over the past 24 hours, putting a fresh spotlight on the industry. Hollywood actors have inked a tentative agreement with major studios following an unprecedented 118-day strike in a move that can allow entertainment companies to restock their content libraries. Tense negotiations have previously centered around minimum salaries and residuals for streaming programs, as well as compensation protections against the use of artificial intelligence. Now, bigger picture, the end of the actors' strike comes after writers and studios reached an agreement in late September to end a strike between the two sides. The walkouts had supercharged other labor action across America, from strikes enveloping the United Auto Workers Union and hospitality employees in Las Vegas to ones that were averted beforehand, like UPS versus the Teamsters. Major studios like Netflix, ticker NFLX, NBC Universal, ticker CMCSA, and Paramount, ticker PARA, were all part of the latest drama that postponed many a production. But that wasn't all, as Hollywood took over earnings season this week. Despite some nervousness surrounding the direction of the Mouse House, shares of Disney climbed 4% after hours on Wednesday after revealing aggressive cost cutting and stronger than expected growth in streaming subscriptions. Profits were also seen at ESPN Plus, but a decrease in ad revenue continued to prompt speculation that Disney could finally sell its TV assets. The advertising meltdown was even more apparent at Warner Bros. Discovery, ticker WBD, as the stock plunged 19% amid debt warnings and comments from CEO David Zaslav that the industry is going through a generational disruption. Even the box office blockbuster Barbie, which was released during the quarter, couldn't come to the rescue, though fresh movie titles did help move some other stocks. Now, in terms of what's coming soon, shares of Nintendo got a boost after the company revealed that a live-action adaptation of its popular Zelda franchise is in the works. I didn't know that, but that sounds cool. The film would follow up on the success of the Super Mario Bros. Movie, which has generated more than $1 billion in sales. The Japanese entertainment giant even hiked its full-year forecast due to its foray into showbiz, with hopes that popular characters like Zelda on the big screen can drive more users to gaming in its console, the Switch. I mean, I like the strategy. Nintendo's got some classics. I'd love to see all of these live action. I saw Super Mario Bros. I thought it was awesome. So, I'm still one of those people where, like, I gamed growing up. I don't really game anymore, but, it's something that I don't know. Part of me says I wish I did, but also, like, I don't know. I just like being here and, kind of doing what we do. So you can't really have as much time to do that if you're gaming. But I'd go see a game movie, right? In terms of, Disney, we just have another, I don't want to say lackluster, but kind of lackluster. There hasn't been any real fireworks this earnings season. It's like either there's a move between like 2 and 5%, or occasionally you've got a big drop, but there's like no big pops, no real positive news, coming out here. So Disney climbing 4% after hours on Wednesday. Congratulations to them. We'll see kind of how Disney is looking at open. It could be a nice little post earnings potential play, right? Disney comes down and drops to this, what level is this? Like 86.67/87 level, and we get a nice peak below and fail. Disney Lottos could make out for a really nice day trade. So that'll be something that I keep my eye out on here. So again, 86.79 on Disney. Is what for peak below and fail. Nice. Awesome, awesome. And today is coming off the back of another solid day in markets yesterday. We had AMD come through on the quick scalp there for calls. Our AMD longer swing calls also coming through as it continues to push higher. We've got our Apple long swings that are still cooking. We have BAC, which we've been watching for a while, finally got that hourly bear flag breakout, fired down to the price targets. We had spot puts for a nice little intraday scalp that ended up, a multi 100% return, which is amazing. Again, the initial move from that, we were just looking for the quick small move, but if we get the fire down, awesome. And we got the fire down if you held those runners, and even if you didn't, great profits on the initial scalp. So a great day yesterday, despite me having some running around to do, and that's all you can really ask for. You get 3-4 solid trades. It's amazing, right? You can have an amazing day. You really only want to get 1 to 2 solid trades out of a day if you can. If you get 3 to 4, you're lucky, right? And more than likely, you're kind of stretching it, in terms of your luck here. But luck is when preparation meets opportunity. So as long as you prepare and you have the will to execute, you always find opportunity, and you always get lucky, right? In terms of economic news, new relationship, U.S.-China ties will be in focus as Treasury Secretary Janet Yellen hosts Chinese Vice Premier He Lifeng today and tomorrow to discuss topics including U.S. concerns about Beijing's trade practices. Yellen has repeatedly insisted that the U.S. is seeking healthy economic competition, which requires a level playing field for American firms, while Chinese counterpart Han Zhang has recently indicated that ties were improving. Yellen's meeting comes ahead of the much-awaited summit between President Biden and Xi Jinping next week. Will the meetings lead to decoupling, de-risking, or a new U.S.-China economic relationship? We'll see. If I had to guess, probably not. In terms of, and just going deeper into that, if you're not aware of kind of where we are with China, tensions are the highest they've been and the thickest they've been in decades, really in the modern time period. And we're pretty much still on the brink of war with China. We have been for the past year, and all of the actions that are taking place are pointing towards some type of conflict materializing. So again, knock on wood, we're not speaking that into existence, but that's just where we're at, right? You want to make sure that you're not being negative in life, but also that you're not being an ostrich and sticking your head in the sand. When you have the president of the U.S. over 6 months ago now went on a tour around the Asian Pacific, shoring up our alliances with other countries that aren't China, right? And we have this kind of every single week there's more escalation in terms of tensions going on. We're trying to stifle their progress with AI. We're stopping our computer chip companies from selling them computer chips, which are essentially the oil of the future, right? We're doing everything that we can pretty much to stifle them, and then same thing vice versa. I don't think that Yellen is going to smooth anything over, but we'll see, right? The horse and pony show that is American politics continues. In terms of healthcare news, Wegovy rival. The FDA has cleared Eli Lilly. Their ticker is LLY. They've cleared their GLP-1 receptor agonist Zepbound as a weight loss treatment, meaning Novo Nordisk Wegovy will finally get a formidable challenger in the U.S. obesity drug market. Tirzepatide, I guess that's what Zepbound is, was previously available as the highly successful Mounjaro to treat type 2 diabetes. Investing group leader Dividend Sensei sees a big crash after Mounjaro mania sent Lilly stock to the moon with a potential downside of 60%. The popularity of weight loss drugs is growing quickly, with analysts expecting them to hit the consumer industries, including food and beverages, though others have downplayed these fears. It has, right? Novo Nordisk and Eli Lilly have been going crazy. Eli Lilly is the Michael Jordan of pharmaceutical stocks, and Novo Nordisk is kind of underrated, but should be, held in higher regard than it is. It's kind of overshadowed by Eli Lilly. But weight loss drugs are all the rage, and we've already reported somewhat on these food and beverage companies starting to see the ramifications of these weight loss drugs. I hope everybody that takes them can keep the weight off, and they make the dietary changes that are necessary to live a long and healthy life. And I don't really care if it does affect these food and beverage companies. At the end of the day, you're poisoning people. So I hope your bottom line, goes down a bit as a result of that. In terms of automotive news here, self-driving recall. Let me see here. Let me make sure also. Okay, cool. Let me check the. Okay, nice. I got like a random feeling. I don't know if you guys get that sometimes, like maybe deja vu and it randomly happens, but I got a random feeling that I was like looking at yesterday's pre-market, prep a newsletter, and I was like, what is going on right now? But there you go, live deja vu in studio. In terms of automotive news, self-driving recall. General Motors, ticker GM, self-driving unit Cruise is recalling 950 driverless cars across the U.S. and may file additional recalls soon after its decision to temporarily halt production of its autonomous Cruise Origin vehicle. The recalls are being done to update the collision detection subsystem of the Cruise automated driving system software, which caused a collision with a woman in San Francisco who was then dragged for about 20 feet. Wow, that is not good. The software wrongly characterized it as a lateral collision and directed the robotaxi to attempt to pull over out of traffic, pulling the individual forward. Soon after the incident, California suspended Cruise's permits in the state, eventually prompting the company to pause all operations. Not good for GM, right? This is stuff that does happen. It's a bumpy road on the way to fully automated self-driving. But yeah, that is kind of a worst case scenario. It's something that they definitely will have to take a lot of steps back from, because cars hitting and dragging pedestrians, that's like the worst possible outcome. So not looking good for GM, right? I feel like GM has been really facing down a lot of headwinds. First is the auto strike with the UAW, United Auto Workers, and then now it's this self-driving system that's mowing down pedestrians. Not a lot of good press recently for GM. Now, let's see. Does that mean that anything looks interesting on their stock? We can see. I mean, they've just been in a pretty consistent downtrend here on the daily. Lost support at $30.78 on the weekly / probably monthly as well. Yeah. I mean, GM really in the midst of firing a huge monthly bear flag. So yeah, GM can continue to drop, continue to go down, and just not looking super hot overall. So from here where we are, like where we fired down, GM can see $20.71 a share as the kind of first major price target to the downside. That's also where they bounced previously. So, put 6 months out on GM, not a horrible look. If we can get a retracement of 30.50, awesome. I don't know if we end up getting that because GM is just getting absolutely beat down. So we'll see, right? We'll see. But if GM comes up to 30.65, whatever this area is again, that's the monthly bear flag breakdown. You at 30.65. If GM comes back to that level and retraces it, that's a nice spot to get in shorts on GM. Other than that, it's really just watching it shorter term to see if there's a better spot. But yeah, GM puts 6 months out, not a bad look at all. Or you could just go 2025 puts as well. But again, this is a monthly pattern. So each candlestick is 1 month. So make sure you give yourself, plenty of time there. You want to go minimum 6 months out, 6 months out to a whole year out to be safe. I don't believe that GM is that expensive. Yeah. Let's see. If you want to go 2025 puts for January, this puts you what, $291. So very cheap for a year of time on those. So if you really want to set it and forget it, GM is looking like that. In terms of today's economic calendar, we get initial jobless claims, or we got them at 8:30 a.m. Let's see here if we can pull those up. I'll grab it from my phone. Looks like initial jobless claims at 8:30. Remember the Fed, a few members of the Fed speaking today. And then we've got Powell speaking at 2. So Powell, quite the mouther offer this week. That will, be something that can affect markets here in the afternoon. Powell also spoke yesterday. Let's see here if we can pull up. Okay, nice. Market updates. Oh, geez. Former Catalan politician shot in face in Madrid. There's a lot of crazy stuff going on. Okay, so U.S. initial jobless claims actual 217K versus 217K previous, estimated 218K. So we have initial jobless claims that are a little bit better than expected. Not really bullish for markets because, again, you want jobless claims to be higher so that the Fed can focus on its other mandate other than keeping inflation at 2%, which is keeping employment full, right? So you don't really want to see that, like those numbers come in better than expected. But we can also look and see if this has had absolutely any effect since it's come out. No, not really. SPY is just chugging on higher like it has been. So let's get back to it here. That's pretty much everything on the economic calendar. So we're going to wrap up here with our rapid fire stock news rundown. What else is going on? Well, our seller middle, ticker MT, may be lead bidder for US Steel, whose ticker is X. We've traded them a few times, not in the recent, past, but we're familiar with X. Macro uncertainty. ARM drops its first results after IPO. Ticker ARM. Again, they're in the semiconductor space. NVIDIA tried to buy them. Regulatory bodies blocked it, and then they IPO'd themselves. Roblox, ticker RBLX, surges on beat. Will give outlook next year. Weekly mortgage applications rise as interest rates fall. U.S. household debt defaults at millennial highs. Twilio, ticker TWLO, soars as Q3 results and guidance top expectations. Robinhood drops as muted trading activity weighs on results. Amazon, ticker AMZN, offers one medical benefit for Prime members. That's nice. Plug Power, ticker PLUG, Q3, eyes on near-term profitability, and then Morgan Stanley Wealth Management Unit under federal probe. That's never fun when you got the feds poking around, especially when you're like a financial, entity. But it is what it is. That's why we do things by the book, and we kind of keep it pushing. That's what I love about the market. It's already, regulated. It's this, it's that. So of course, there's still going to be manipulation, but it's like you pretty much kind of know the rules by which the market works, and I don't really have to worry about getting into anything where stuff can get seized or this, that, and the third. But anyways, I digress. Let's have another amazing day in markets, guys. Let's look to remain patient. PAYTIENT. When you're patient, you get paid. Let's remain willing to execute, right? Ready to execute and willing to execute. And also, don't be too hard on yourself, right? Make sure that you give yourself grace, but also put that onus on you to execute, get 1% better, right? It's that balance between, okay, I don't want to be lazy, but I also have to understand that I'm not going to become Warren Buffett overnight, right? Or maybe ever. And that's fine because there are a lot of people that are a lot less accomplished than him that are still multimillionaires and billionaires, right? So go out, be your best self. Let's close the gap today between who we are and who we're meant to be. I'm excited to do exactly that. And I'll see you guys back here tomorrow for, is that our last one? Yeah, our last pre-market prep session of the week. Have a good one.